Let's look a little ahead to the future, to the year 2033. This one isn't necessarily so happy. The government has disclosed that without any changes, if things stand the way they are right now, the Social Security Retirement Trust Fund will be depleted by 2033, and there will not be enough money to pay promised benefits. So to prevent everybody from seeing a reduction, Congress may change some rules so that only certain groups are targeted. Is this something that people that are in that retirement red zone right now, or maybe just retired, that they should be worried about?
I really think it is something that they should be extremely worried about their individual situation and really take action on what they should do about it. One of the things that we can do for you, I think we are probably one of the first companies in Northwest Ohio that have this software available for you. It's called your Social Security Risk Score. And, what we can do is we can run this analysis and help you with access your likelihood of a reduction of what your Social Security benefits could be. It is something that we do complimentary for our radio show listeners, giving you that Social Security risk score. But, when you look at it, by 2033, the payroll taxes collected will only be enough to pay 77% of scheduled benefits. And America's really at risk or having that promise that the government gave us, having their reductions go down by 20 or 30%. A lot of us have seen it right on their statement. And I saw another stat that showed roughly about 67% of people that are close to or in retirement time are worried about the impact a reduction of Social Security could have in their family situation. So instead of, staring at the train that's coming at you at 100 miles an hour, what we want to do is we can run this report and the Social Security Risk Analyzer and talk to you about what could be the level of at risk you are in your situation. We can analyze your current retirement plan, and we can identify ways in your individual family situation on how you can help minimize what that impact is. If you haven't got a Social Security risk score done yet, call the office, 419-794-3030. Just ask for the Social Security risk score. We'll run the analysis for you. Again, 419-794-3030. But when you look at it, guys, there can be a couple of different ways. I think, Scott, for you, one of the ways that when you look at people that could be impacted, we could use what your industry has done and kind of the Medicare. There's 10 plus million retirees that are paying higher Medicare Part B premiums because by 2030, with the widespread, changes of the means test, meaning that, with your Medicare premiums, if you make too much, quote, money,
right,
your Medicare premium cost can double.
Yeah, absolutely. The standard right now, just using today's cost, the standard is $164.90. But, we've got some clients that are making, quite a bit of money through retirement where it's up to $650, So you're looking at roughly $450 to $500 more in just a Medicare premium cost, right? And if you're coming off of a group employer plan, you may be paying, $500-600 a month. Now your husband and wife, you go on Medicare, you're looking at anywhere from $1,000 to $1,200 a month just to have Medicare. Mm-hmm. So you're absolutely right, Nolan. That's something that's huge.
And what'll be interesting that comes out of this is the definition that the government comes up with the word wealthy, right? So when I think about wealthy, I think of people making hundreds of thousands of dollars a year, having millions of dollars of savings. But what we can use is we can use the government as a guideline on what their definition of wealthy is. So when you look at this, the fact is the law that already stands today is a portion of your Social Security can be taxable. And when a married couple files taxes and their provisional income is over $34,000, that's when your Social Security starts to become taxable. So one might look at it as that the threshold that the government's going to look at as wealthy, because that's what they already begin to tax people at. Another one, Chaz, if we go back to COVID, in COVID, the government gave out stimulus checks. Mm-hmm. And for households making more than $75,000, I think that's what the threshold was. You didn't get a stimulus check. So then there again, $75,000, that could be the threshold that maybe the government considers you to be somewhat wealthy and maybe not through this means type test be able to get your full benefits of Social Security. You could be one of the groups that's targeted for a reduction. You could also be a group that's targeted for reduction if you have too much buildup in your investment assets. So let's say you did what you were supposed to do, which was save for your own retirement. You built build up a 401k or an IRA or, these retirement accounts, in that scenario, what you could be impacted by is you could be impacted by having too much assets, again, in some other means tests that are out there. They could raise the full retirement age. Another issue is they could, in the future, be a decision of who's making changes on raising rates. So like right now, a large percentage of the voting population is baby boomers.
Right.
But that trend's going to change over time, and younger generations, could be a majority of the voting population when we flash forward 10 years from now. And the question is will the younger voters accept higher tax rates combined with partial benefit reductions for older generations that are out there? Or are they going to say, well, mom and dad, they can afford to have a little bit of a reduction.
Sure.
We should all take a reduction. So getting your Social Security risk score is how you can find out what the likelihood of your reduction is, get some unique insights into your situation, and learn about the strategies on how you can mitigate that risk. We'd be happy to run that free report for you. Again, call the office, 419-794-3030. Ask for your Social Security risk score. We'll get that information for you. But Chaz, when you look at it and you're talking to clients, I know as a certified financial planner, Social Security is one of the cornerstones of somebody's retirement income. It can have a big impact if that number declines.
Yeah, it could absolutely have a big impact, and it's a big deal for a lot of Americans, particularly ones that are, I would say, most vulnerable. The ones that, in some cases, maybe are elderly, maybe widows or widowers, and are living at or below the poverty level. So I think it's important. The downside is all of those solutions that you just discussed, Nolan, none of them are ideal, of course. And the other thing that I counsel clients on is the fact that every single one of those is really outside of our control. These are not things that we can control, what the Congress does with Social Security. So one of the themes that we've used in the past shows is taking back control of your retirement. And I think there's a couple ways that our clients and our listeners can do that. One way, and Scott, you do a great job of this, is just taking people out to ssa.gov.
Sure.
And enrolling them in their My Social Security account, making sure that they're enrolled and that they're getting up-to-date information, they're getting the newsletter, downloading their up-to-date statements. The other thing you can do is just keep listening to reputable news outlets like what you're already doing, listening to the show. We're going to keep you up to date. We've got that Social Security analysis that we can run for you. And so to me, I think just staying knowledgeable, staying up to date about the changes and trying to control what we control is the best we can do at this point.
Controlling what you can control, obviously a very valuable tenet there. And it's all about mitigating risk. Longtime listeners of the show will know it is all about, mitigating your market risk, things like that, addressing the concern about running out of money. When it comes to Social Security and the situation that it's in right now, it's also about knowing the risk that you have as far as reduced benefits. The Social Security risk score, as Nolan said there, complimentary to you. Have that analysis run, find out where you stand right now and how it can all work for you or against you. Complimentary, just give a call, 419-794-3030. You can also go to the website if you like, arhq.com.